Recognizes the gentleman from Georgia.
Thank you, Mr. Speaker. I rise today to speak in support of my amendment to H.R. 22. Minimum insurance requirements for trucks have remained the same since the 1980s. Currently, it's $750,000. Healthcare costs have skyrocketed. For example, hospital care for traumatically brain-injured people can average $8,000 per day. Minimum insurance does not realistically account for multi-vehicle accidents where $750,000 must be divided among all of the injured parties. FMCSA is currently undergoing rulemaking to evaluate current insurance requirements. Congress should not delay or derail this effort. Section 5501 conditions the agency's rulemaking upon its completion of detailed studies that must be completed in consultation with industry stakeholders. This amendment strikes language that is designed to delay and ultimately derail this long overdue rulemaking. When a person suffers life-threatening injuries due to the negligence of a motor carrier, the cost of long-term care and the loss of his or her livelihood is pushed to the background. For families that undergo this ordeal, it often comes as a surprise that despite a congressional mandate in the 1980s, minimum insurance requirements for interstate truckers and bus carriers have remained unchanged. The Motor Carrier Act of 1980 specifically set out to ensure public safety by requiring insurance premiums to be updated regularly. A similar bill, the Bus Regulatory Reform Act of 1982, was passed for the segment of the industry transporting passengers interstate. While the minimum insurance levels in 1985 for general freight carriers and small bus operators was $750,000 and $1.5 million, respectively, with higher liability limits for carriers of hazardous materials and large bus carriers, the intent of Congress was to increase the minimums regularly to keep pace with inflation. In April of this year, the Federal Motor Carrier Safety Administration Act, or actually the administration, released a report to Congress that examined the adequacy of the current financial responsibility requirements for motor carriers. The conclusion was clear. Today, the costs of injuries and fatalities arising from crashes far exceed the minimum insurance levels interstate operators are required to carry. As a result, victims are often not appropriately compensated for their injuries. Language in Section 5501 is an attempt to stop or at the very least delay this long overdue FMCSA rulemaking in its tracks by taking away the resources necessary for the agency to evaluate appropriate levels of financial responsibility for the motor carrier industry. FMCSA rulemaking is necessary because current insurance limits do not adequately cover crashes, primarily because of increased medical costs. To be on par with medical consumer price index inflation, the liability limit for general freight carriers today would be $4.4 million, calculated from the 1980 passage date of the Motor Carrier Act, and around $6.5 million for small bus operators. Moreover, the April FMCSA report found that in real terms, insurance premiums have actually decreased for the same level of coverage since the 1980s. The result is that thousands of crash victims are left without the financial resources to pay medical bills or restore the quality of life that he or she enjoyed before the trucking or bus accident, and that despite the fact that insurance premiums have gone down. In many cases, the burden of health care costs are passed on to taxpayers as Medicare and Medicaid shoulder millions of dollars of medical care each year due to inadequately insured carriers. We must keep the trucking industry accountable for safety by supporting this amendment, and I urge my colleagues to support this amendment. And with that, I will